Hello, everyone. Good morning. Good morning. Let me know if my voice is coming through. Let me share my screen. Give me 1 second. You should see my screen now. Please say screen, video, audio, okay, or both okay. Let me know that everything is working. And we will get started. Hello, George. George, can you see my screen? Is everything working out okay? Thank you so much, George. All right. Give me 1 more second to get organized. Thank you, Mark. Thank you, Jeff. I am so glad that everything is looking and sounding good. It's another busy week in the markets, and we'll dive into all of that. Thank you, Cheryl and Phoenix from our BK Traders room. And Ricardo. For those of you that are joining us on the live stream, let me know. I always like to start by hearing from where you guys are streaming in from, what parts of the world, as we have a lot of people from all corners of the globe. My friends in Australia are usually the ones that are burning the midnight oil, trying to get ready for this new trading week. And so I am delighted to have all of you on. And good morning and welcome to Kathy's Caffeinated Market Buzz, Portland, Australia. In a couple weeks, I'm going to be streaming from California, which won't be so bad at 5:45 a.m. But as you may know, I start trading at 6:30 a.m. New York time. I put on my New York session trades at 6:30 a.m. I put on my Asia session trades at 8 p.m. New York. So that means that I'm going to be up at 3:30 in the morning doing trading the New York session, which is not so bad for a week, but I don't know how you folks do it from the West Coast. But not next week, but towards July 4th week, I'll be streaming to all of you from California. So it'll be very interesting to see how adjusted I am. We'll see. All right. Good morning, everyone. Let's go ahead and get started. Welcome to Kathy's Caffeinated Market Buzz. I've got my coffee. Hopefully you've got your drink of choice as we talk about all of the things that are going to affect the markets this week. And it will be another major trading week, even though it is shortened in some way, because on Wednesday, we have a US holiday. On Wednesday, we have Juneteenth. So US markets are closed, which means that in some ways everything's squished at the beginning of the week, the end of the week. And today is, a holiday for many people in the U.S., at least, in the school district as well. So there's a little bit less participation, and there's a little bit less volatility. We're not seeing big movements today, but that does not mean that we may not see some big movements this week, because we have 3 central bank rate decisions. We have the Bank of England, the Reserve Bank of Australia, and we have the Swiss National Bank. On top of that, we also have the U.S. retail sales report. Please let me know if you can see my heat map. My YouTube stream page seems not to be updating, but I'm going to refresh it right now just to make sure everything looks good. But please confirm to me that, I can see that you're seeing my heat map. So that's what we're going to talk about. We are kicking off the New York trading session and the new trading week with strength in the US dollar. But you will see that my outlook for the dollar is neutral. Why? Well, it's very, very important to talk about the overall backdrop of what's going on. First off, last week was very revealing. We had a lot going on. The Federal Reserve had a monetary policy announcement. And as you may know, the Federal Reserve, they left interest rates unchanged, but the biggest takeaway was that they said there's only that the dot plot showed a forecast of only 1 rate cut this year, which is, first of all, far less aggressive than a lot of the other major central banks, and also less aggressive than what a lot of market watchers have been anticipating. Non-farm payrolls was good, so that supported that. The consumer price index at first, wasn't, it was on the same day as FOMC. It showed price growth slowing, but if you had joined us for the prep for the week, the week ahead trading prep, I talked about how the CPI wasn't really going to matter because it was on the same day as FOMC. Everyone was laser focused on FOMC. That was all that mattered. But the PPI came at the end of the week, and that was after FOMC. So aside from the Fed telling us that, or signaling to us that there's only 1 rate cut this year, the other big takeaway was that they really don't know. I mean, I put a video out, kind of sarcastically, but quite seriously too, that this is the first time ever I've heard from a Fed chair basically admit that they have very little confidence in their own forecasts, and that they are basically data dependent, which is why PPI, which came out after the FOMC rate decision, was so market moving at the end of last week. The dollar tanked as a result because the PPI number was so soft. Now, of course, no surprise, right? I mean, gas prices are lower, consumer prices are lower, so obviously PPI is probably going to come in a little lower as well. And that is another reason why this week's retail sales report is going to be so important, because there's only 3 things that we really watch when it comes to US data outside of the Fed decision. It's number 1, non-farm payrolls, which we know is stronger. Number 2, CPI, which we know is weaker, but not weak enough. And number 3, consumer spending, the retail sales report. And so we get the retail sales report on Tuesday, I believe. We get the retail sales report, and the real focus is, has consumer spending slowed? We know from so many retailers basically warning that consumer spending has probably slowed. So many retailers are saying that consumer spending probably slowed. And so, the risk is possible to the downside for the retail sales report. But if you look at the forecasts, which, we can take a sneak peek at right now, if you look at the forecast for the retail, that's Wednesday. If you look at the forecast for the retail sales report. Look here. Economists are actually looking for consumer spending growth to accelerate. They're actually looking for retail sales growth to rise 0.2%. Ex autos, they're expecting to rise 0.2% as well. Don't worry, my friends, we will be talking about Eurodollar, we will be talking about gold, but we need to lay out the backdrop. All right, it's not just about the charts. It's about the story, it's about what's going to drive the story. And so, especially since retail sales are coming out tomorrow, they're basically coming out at the front of the week, which means that it could dictate trade for the rest of the week. So economists actually thinks retail sales could surprise to the upside. The warnings from retailers, the trend of oil and gas prices suggests that it should be to the downside. Now, the one thing we do know is that auto sales seems to be pretty robust, the strongest, I think, since April. But at the end of the day here, the Fed's data dependent, which makes this piece of data, which is one of 3 most important pieces of data for the Fed, so important. So I don't think, I think the risk is is just kind of neutral, meaning that it could go to the upside, could go to the downside. The arguments for a stronger number is that we have had stronger non-farm payrolls. Earnings are on the rise. Average hourly earnings was also stronger, but the argument to the downside is that gas prices were lower and retailers are warning. So what does that mean for us as traders? That means for us as traders is that we're only going to be trading this reactively. We're only going to be waiting for the number to come out, and we're going to ride that move because it's going to be a significant move. If retail sales surprises to the upside, 0.2 is good enough. If we get 0.2 or better, but it needs to happen on both the headline basis and the ex-autos and gas basis. If we get consumer spending rising, it's going to be a pro-dollar move. And the dollar is going to rise against the yen. It's going to rise against the Swiss franc. It's going to rise against the euro for many of you that are asking. And I like euro to the downside quite a bit if we do get a stronger retail sales report. However, if we get a weaker retail sales report, then it's problematic, right? If we get a weaker retail sales report, then the dollar is going to probably sell off. Dollar yen will probably sell off, but the better trading opportunities may be in long Aussie dollar, maybe long Aussie dollar, maybe just short dollar yen, because Europe has its own problems, which we'll be talking about later. But a weaker number is problematic. And, we'll definitely shoot up rate cut expectations, but the market will still be, kind of not very confident about, whether this is enough to justify a September rate cut, because rate cut expectations have been all over the place. After FOMC, basically the Fed CME futures showed only 1 rate cut this year and 40% chance of 2. After the PPI report, which really is not that significant of a report, the market is now pricing more than 2 rate cuts this year. So that just shows you how erratic rate cut interest rate expectations can be, and how sensitive it will be to the #1 most important piece of US data this week, which will be retail sales. And that is why I'm neutral. I'm neutral because retail sales will very much determine how the dollar trades for the rest of the week. I'm bearish euros overall. We have to acknowledge that the euro is going to trade in the market's appetite for US dollars. But I'm bearish euros overall because the main focus for the euro is going to be this whole election mess. And that's going to prevent the euro from rallying significantly, because the thing here is that with the election uncertainty in France and other places, the date for the election is set for June 30th and July 7th. I think it'll be very difficult for the euro to rally before the election results are out, because it's not just kind of referendum on how well Macron is doing, but and whether it was a smart bet on his end. It's also a reflection of what this could mean for overall EU politics and European continental politics in general. So that is why it's so significant. And also this week we have the German ZU and ZU and PMI reports. The ZU is coming out tomorrow. That's going to be very important. Eurozone data has mostly been stabilizing, but I think that the election results will dampen sentiment. And then we have the PMI reports at the end of the week. So while we don't have a rate decision for the ECB this week, the PMI reports are very, very important. They are kind of our first insight into how the country is doing. And I don't think it's going to be positive. You combine that with the election uncertainty, I think it's going to be euro bearish. However, it's also all going to be about the dollar. Now, we may have plenty of opportunities, and at BK Traders, we love to trade euro crosses. I love to trade euro Aussie, euro Kiwi, euro CAD, euro Swiss. Euro dollar itself will be a function of the market's appetite for dollars and the market appetite for euros. So some of the purer trades will come in the euro crosses. We have a Bank of England rate decision this week. I am also bearish sterling. The market is pricing in 2 interest rate cuts from the UK this week. We have a lot of UK data. Right before the BOE rate decision, we have UK inflation data. Right after the BOE rate decision, we have the UK retail sales report, and that wraps around the central bank rate decision itself on Thursday. Now, no changes are expected from the Bank of England, but the data is expected to be softer, and the BOE is expected to lay the groundwork for an interest rate cut. And that will be bearish for sterling, in my opinion. I am bullish the Australian dollar. We also have a Reserve Bank of Australia policy decision this week, and the RBA is expected to leave interest rates unchanged. If you remember, the last time they met, they talked about it was a hawkish hold. They actually said they talked about an interest rate hike, which is quite dramatic because that's completely opposite direction than what everyone else had been talking about. Now, of course, not serious about that, but between the really good jobs report that we had that the market completely ignored, that I don't think they should have, and the RBA's guidance, I think they're going to maintain their hawkish hold. And that is why I like buying Aussies. And that's why if we get a weak US retail sales report, perhaps the best trade is to go long Aussie dollar. I'm bearish CAD. I'm very bearish CAD. I think that the market is pricing in 2 more interest rate cuts from the Bank of Canada this year. They've already cut interest rates once, which is clearly far more aggressive than the 1 interest rate cut that is priced in for the Fed, that the market is looking for, the Fed is signaling. So between that, the lower oil prices, the weaker data that we've had from Canada, I'm very bearish Canadian dollars. I'm bullish New Zealand dollars. We have New Zealand GDP numbers due for release this week, and they should be stronger. We have stronger retail sales and we have stronger trade in the first quarter. So I think I think that Kiwi should benefit to the upside. If we have a weaker US retail sales report, Aussie and Kiwi should benefit. I'm neutral to Swiss franc. We also have the 3rd central bank rate decision this week, which is the Swiss National Bank rate decision. SNB is not expected to change interest rates, but maybe there's a small chance they may, because they were the first out of the gate to cut interest rates. Data since then has been quite good, which is why I don't think they're going to change interest rates. But I think they're going to keep their easing bias intact, because if the ECB is easing and global growth is slowing, they're still going to maintain their easing bias. So I'm kind of neutral bearish Swiss francs, and then I'm neutral bullish the Japanese yen. I think that obviously dollar yen is going to trade on the market's appetite for US dollars, but I think that the yen is also going to see some upside. I think the yen may have bottomed as the Bank of Japan basically lays the groundwork for bonds buys and the possibility of a interest rate hike at the July meeting. I think traders, investors are going to be pre-positioning for that as we get closer and closer. Obviously, we're still a month away, so some time away, but I'm bullish yen as a result. So now let's take a look at the data, and then we'll look at the charts. And then Boris will talk about gold and indices. So last night, we had a weaker New Zealand PSI data. This is quite bearish because the PMIs were weaker too. But I'm still bullish Kiwi overall. It's going to be a function of the market's appetite for US dollars. Chinese data was softer. Industrial production was weaker. Fixed asset investment was weaker. Housing prices was also quite weak, but the retail sales numbers rebounded a bit, and that is why Aussie and Kiwi are lower today. We also had Eurozone wage data, which was confirmed to have very strong, robust wage growth in the first quarter, and that explains why Euro is up today, even though the dollar is actually stronger against most of the major currencies except for the euro. We had the Empire State Survey come out, and that was stronger. And that's going to be pretty positive for the Philly Fed later in the week, and then also the ISMs that will come out later this month. Tomorrow, we have the retail sales report that we just talked about. But before that, tonight, we have the RBA rate decision. So once again, hawkish hold expected, in my opinion. The revisions to Eurozone PMIs are not going to matter. Instead, the market focus will be on the ZEW survey, which the market's looking for a stronger number, but I think there could be some weakness after the election results. U.S. retail sales, retailers have been warning to the downside like crazy, but economists looking for a stronger number, so someone is going to be surprised. We also have industrial production numbers, and then we have the trade data from Japan, which is expected to be weaker, and then we also have the UK inflation data on Wednesday. Now, Wednesday's a US holiday, so trading is certainly going to be thinner. It's going to be quieter, not as much moves, which means that we could have some outsized volatility. But we've got the UK inflation data, which is expected to be softer. Obviously, nothing from the US. We have New Zealand GDP numbers, which are expected to be flat, better than the previous month. And then on Thursday, we have the SMB and the BOE rate decisions, both of which are expected to keep rates unchanged. BOE could lay the groundwork for a cut. Watch the number of people who are voting for a cut and how the voters are faring. And we have the Philly Fed survey, which could be stronger now that the Empire State was better. We have jobless claims, building permits. None of this is hugely market moving for the dollar. It's really just about retail sales this week. And then Thursday night, Friday is when we get the PMIs. We have Australian PMIs, we have Japanese PMIs, all of which will be very important. PMIs are the first set of data we have from all of the countries. We also have Japanese inflation data, which should be stronger because the Tokyo inflation rate was stronger. We have retail sales data from UK on Friday. We have the Eurozone UK PMIs. As you can see here, market is looking for stronger retail sales from the UK. And they're also looking for mixed PMIs, but slightly stronger PMIs from the UK as well as the Eurozone. So we'll have to see if that's really true and if that's really what happens, but be very market moving. We also have retail sales from Canada and PPI from Canada on Friday. That's going to be very important for the loonie. And then the S&P manufacturing data from the US, which really doesn't matter all that much in my opinion. So the main focus is going to be on the US retail sales report, the 3 central bank rate decisions, and all of the PMI reports that we have. Taking a look at the charts, many of you are asking about euro, you're asking about gold. So I talked about how bearish euros overall. And I think that overall, we are going to see euro still below all of the major moving averages. It's bouncing. I think that if it tests and rejects the 107.50 level, it could be another leg lower for euro dollar. But don't be fooled. This will be determined by one thing and one thing only, and it won't be the charts. It's going to be the U.S. retail sales report tomorrow. I would just wait for the number to come out, see what it is, and ride that move. Sterling is the weakest because, we're going into the Bank of England rate decision. It's definitely, in my opinion, a sell on rallies. And, there is some support at the 126.25 level, but if it rallies, I'm definitely bearish. Dollar yen still very much in the uptrend, above all of the major moving averages. And that is partly because we have US, not partly, but largely because we have US yields higher. Dollar yen trades on the back of US yields, and the rise in US yields is very positive for dollar yen. Right now, the uptrend remains intact. Market is clearly positioning for a stronger retail sales report, but that will determine things. I don't think that we're going to get much more beyond these levels. The one thing to warn you about is that because we have Juneteenth on Wednesday, that may be the perfect opportunity for the BOJ, for the Japanese government to intervene in the markets again, because you have less participation. That can give them more bang for a buck if dollar yen goes back to the intervention levels, which it did on Friday, and kind of U-turn backwards. So if we get back on the 158 handle and it's Juneteenth, we could see some intervention around that. I am warning you to watch out for that. And for U.S. traders, what that means is the potential for Japanese intervention means that if you are long dollar yen, definitely have a stop. Now, your stop probably won't be respected, so maybe pair your positions ahead of the holidays. Or, maybe you could take a small punt to the downside. Dollar Swiss is holding that 200 SMA very, very well. I think it could find some support here. Obviously, it's going to be affected by U.S. retail sales, but on the Swiss franc basis, I think is probably negative, and it's probably going to be negative for the Swiss franc. The Australian dollar, RBA, like I said, is probably set to do a hawkish hold. This 65.80 level is, or I would say 65.60 level is a very important support level for Aussie dollar. It's right here. And we've got two big rate decisions in the next 24 hours. Let's see how those play out. But I think the opportunity is more to the upside than downside in Aussie dollar. Kiwi dollar also rolling over a bit, quite a bit of support at 60.80. Once again, it's all going to be hinging upon retail sales. I'm very bearish Canadian dollars, but if we get a stronger U.S. data, I'm going to love the dollar CAD to the upside. I think it very much move up to the upside. The 20 SMA is crossing above the 50 SMA. Take it for what it's worth, though, because as I said, it will be the data that determines how all of the dollar trades and not the charts. But I'm very bearish Canadian dollars as a result. All right, as for gold, I'll let Boris talk about gold and share his thoughts on stocks as well. Let me see if there's any questions for me in the meantime. Let me know if there are questions.
Oh, hang on, I gotta get on camera. Where's my camera? Hang on, I can't get my camera. Here we go. Oh, there we go. Sorry, camera was a little bit off. I'm in Jersey today. Hi guys, hi everybody. How's everybody doing? Hope everybody's doing really, really well. Very excited for this week. We do have kind of a little bit of a half week or short week because of the midweek holiday, but it really feels to me like we're in the equity space. We are certainly starting to lose momentum. Let me just grab my screen here for a second. Show my screen. See if you guys are seeing my screen. Okay, cool. So interesting story here. I think first, obviously on the gold issue is gold is down a little bit today, but it's really, really holding that 23 handle really well. And it's actually very impressive at how well it's holding it, because I really thought it was actually going to come back down a lot more. If we go on like a longer term chart, we can see that this 23 really held well on the 4-hour chart, and we're kind of just basically back to this 23-24 shape. Having said this, though, I think all risk assets are kind of losing steam. If you look at gold, it peaked at 2,500 and just been distributing really since May in a consolidation mode, and we really need something fresh to get it up and higher. So we may very well just be churning for quite a while here, which is why scalping every single day is what we're doing, has been working very, very well, because we're just not really generally positioned. On the equity side, I see a lot bigger concern. If you look at this is like the 4-hour chart, and it's really pretty clear that this 5,500, basically 5,500 in the S&P, seems to be the cement ceiling, right? It just like, it really, really seems to be distributing. Kathy is talking a lot about how the macro data is starting to slow, the consumer is starting to slow. I think the market has gotten this way, way ahead of itself. This is the time. So we sort of, when they say sell in May, go away, what they really mean is that In May to June, we rally, and by June, we kind of start to taper, and then we start to get weaker. So I have a feeling we may be, I'm watching these levels very carefully, unless we take out the 5,500. I mean, I actually think you could sort of close your eyes if you're positional here, get short, put the 5,500 as a stop, and just hope that it falls over. It hasn't quite given us a sell signal. We haven't really broken the SMA here just yet. We broke it once, but not really gone down a lot. But if you sort of use these upper end wicks at 5.4, 5.6, so give yourself that extra 40, 50 points of slippage in the S&P. I think the 55 is a cement ceiling for now, and we kind of start rolling down. The first area, of course, is going to be the 54s, and then maybe even down to the 53s, and it could be very, very quick. Just because look, everybody's super complacent. We've had all these big rallies. The kind of swift declines are just set up for the perfect setup. If you guys are interested, I'm obviously going to go live trading with my crew right now in about 15 minutes. I'll be live trading with you guys tomorrow on YouTube, so come check us out if you want to check us out. But if you want to sign up for the full course, it's a 3-month coaching course with me on how we pass the prop. Be sure to sign up for that. Be sure to sign up for the discounts with Apex, which are like 71% off. So it's really, really good deals.
Link for pass the prop.
Sorry?
How did you get the link for your 3-month coaching?
Oh, sorry, I thought you put it up. I'm sorry. I didn't get the link. I was watching links. I didn't realize you put up the club. Let me just do that right now. Hang tight a second, guys. Oh, that's the prop. I gotta find it. I had other links here that I wanted to share with you too. Just one second. Hang on a second. Okay, here we go. Let's go back to here. Let me send you the link. Okay. So absolutely, sign up for the pass the prop. It's the best deal that we have. It's a 3-month coaching program with all the tools, all the trading that I do every single day. We're doing really, really well. As a matter of fact, one of the things that we started to do in pass the prop that I think a lot of people will find very valuable is I've subdivided a trend-based version and a counter trend based version into 2 separate accounts, and it's kind of our new strategy for passing the prop. Basically what it does is delineates the risk. So if you're trading trends, you can just trade in one account. If you're trading counter trend, you can trade in the other account, or, which is what I'm doing, you trade both accounts, but from 2 very different perspectives using the exact same instruments that we have here, and that allows you twice the opportunity to get funded very quickly. I'm already in one of the accounts. I'm 10% up in a couple of days. We're just looking, I need to get to 53,000, but I'm at 50,500. Trying to do about 300-400 a day, and we're going to try and see if we can do that today in the opening session. So it should be really, really cool. I'm looking forward to all that. I have one other thing that I wanted to share with you guys. Let me see if I can find it here. Yeah, here. Let me just do this a second. I wanted to share this link with you. This Thursday, I'm doing a very, very special automation webinar. This is for those people. There's 2 ways for you to kind of automate your strategies. You can become part of BK, or you can just simply fund an account with our favorite broker, ACAP, and you will be able to get a lot of these strategies fully automated. The key thing here is the strategies that I'm going to show you that are going to be automated are on the FX side, which is what a lot of people really like. I have actually refined them over the weekend to really, really make them super interesting. I'm introducing even a better high probability factor into the whole thing that almost ensures that you're going to be getting some very, very steady returns on a fully automated basis. So if you're interested in that, that's going to be this Thursday. There's we already have a big crew signed up, but there's just still a few spots left. So for those people who are interested, click that link and just follow the links. And if you want to sign up, I will send you the Thursday meetup for that. So that's pretty much it. We're going to run. I hope everybody's enjoying the week. It's going to be a very interesting week for us to trading. I love the new approach of the trend counter trend for people who have one personality, the other personality, or both personalities to pass the prop. And everything is working so far really well. I will see everybody in the markets in the next 15 minutes, and I'll see everybody on YouTube tomorrow. If you guys want to come join me, love to see you there as well. Everybody have a wonderful day. I'll see you guys later. Bye-bye.